What it do, YouTube? CFX here back with another video. And in this video, we're going to go over our weekly, I guess you could say weekly markup review. I know I didn't give you guys a weekly markups. It's because I didn't have one this week. I didn't do a weekly markup this week, but I did send trades in the group chat on my Telegram. So you guys will be able to see what I sent out. We're going to have a quick little review over the trades that I did send out this week. And I'm gonna just show you guys how they turned out and how some of them are still kind of moving, but it's very important to know, like, one, when to enter a trade, because we're just gonna get into it. So first, starting off with this markup, we had Euro NZD, which came down to our demand zone and our support. And I said it was going to buy up. That was my prediction for it. I'm going to show you guys why. As you guys see, it did end up buying up, and we're going to go over the amount of pips that it ended up going. And it cost it to buy up as well, when to enter and stuff like that. Y'all know the usual. Also, we're going to go over USD CAD. Now, this one bought up exactly from the moment that I said it was going to start buying up, but it did not sell at the moment I thought it was going to sell. It actually went outside of my zone a little bit, but you already know we're going to look at. We're going to look to the left, see what was to the left, or what structure level was to our left, and see where did it go to. It's all about reacting to the market. So had a little error right here. This was actually Euro USD, and I'm gonna show you guys the original markups for that. You guys send it in here. Let's see. I don't think it's in here. What's this one? That's Bitcoin. I'm gonna go to it though. But this is gold. So gold ended up going as projected as well. So we're gonna go over all of that. And I just want to show you guys the trades that did play out as expected. And as I said, again, we're going to go over the ones that are still in progress. So gold being the first one up that ended up going as projected this week. And it basically was in a trend. So there's different ways that you guys can mark up a trend. You guys know that you can mark up the bottom of a downtrend, but you can also mark up the top of a downtrend. Uptrend. So let me hide a couple of these real quick. So you guys can clearly see, like, this market is in an uptrend from here to here, and then from here to here. So seeing that this market was in this uptrend, it had plenty of ways that it could go. It could either keep on bouncing in between the trend lines, which it ended up doing. It kept on bouncing in between the different trend lines. Now, there are multiple ways to trade it when it's going like this. You can either trade it as it continues to bounce in between, or you can trade the breakout. So you can either wait for it to break out above, come back and retest, and then continue to buy back up, or you could trade when it break out below, come back and retest, and then continue to sell back down. Here you guys see that we do have a markup for it to retest back up here and then sell back down because it has already broken below. Now, reason that this trade is about to reverse is because, for one, we have a lower high from here to here, but we also have now created a lower low. Major signs of reversal, right? So we got the breakout. We got a lower high and lower low. Now all we got to see is if it's going to respect this retest right here. And if it respects this retest, it's going to sell back down, possibly to either this zone or this zone, depending on how strong that sell down is. But the US dollar is en route to gain strength for the rest of this month, I would say. So we could see a couple things happen. It depends. Could keep on going back and forth, but I would get into the reason why the US dollar may gain strength for this month and stuff like that. But let's get into where to enter this trade. So me personally, I did enter right at the near bottom. As soon as it tested, I entered before my candle told me to enter. And the reason as to why, honestly, we were getting little movement. We were getting little movement right here. But the thing was, I saw my candlesticks getting smaller. We started to form weak rejections. And then once it started consolidating right here, and then it sold back down and still didn't break this level, that was my confirmation that this market was about to buy. Because it still failed to break this low that ended up forming right here. It still ended up failing to break here and still respected the uptrend. So that was basically about my confirmation that this market was still going to buy up, honestly. So I entered right here at the low and caught it. Now, thing is, I did exit out a little bit late. I exited out at 1823 when I could have exited it all the way up here at 1829. And let me tell you why you would have known to exit at 1829. The reason why is because, for one, it failed to create. Let me make this bigger. Let me turn auto off. So it failed to create a higher high. That's first of all. But if you look at the fib level that we are at, look at the fib levels. It started to reject right here at this fib level right here. So seeing that, and it was also nearing a supply zone, and it was starting to reject out of there. So that would have been my confirmation to be like, okay, maybe it's time to go ahead and exit this trade, and I would have got much higher profits than exiting out. Like, that was about a 5-point difference. And I mean, it's not much, but you know, I always say you're going to leave money on the table, but it's nice to, you know, catch bottom of the trade and exit at the whole top of the trade. So that's how you would have known to exit out of this trade. Now, yes, sometimes you do end up seeing like wick rejection and stuff like this. But thing about it is, this wasn't near a level of structure. Like, there's nothing right here that really could have stopped it other than maybe this, but we have already had the impulse. We already know that this market is, you know, ready to be bullish, and that we're going to push up even higher or to the previous zone that, or the previous high that they had created. We already know that. So we had no reason to pull out right here, but we did have a reason to pull out right here. So that is how you know to exit that trade. But this is where I entered that, honestly. And like I said, it failed to create a lower low or break below this low right here. And even when it did come down to here, it came back up, consolidated, and came back down again. There still was no reason to look for the sale or count this trade out as invalid for the buy. So that is why I entered that. Let's see. And also support zone right here, like a demand zone right here. So even just counting all of that in, like counting in all of that, that's major level. Now, if you look and see where the market is rejecting out of right now, where is it rejecting? It's rejecting right out of the zone again. But we'll go over that in deeper details on Sunday. Now let's go to Euro NZD. So Euro NZD was probably one of my favorite trades this week. Not because it caught the most pips out of this trade, but because of how perfectly it played out, like how perfectly it came to the zone and just instantly bought up. That's what you like to see out of your markups. that is what you like to see. Like, that's perfect. This trade ended up buying up 252 pips. So that's great for just a that was like a, I mean, it took nearly 2 days for that move to play out, but that's exactly what you want to see. So let's get into Euro NZD. Now, we marked up this zone because if you look to the left, this is where two impulse moves happen. The first one being right here that pushed the market up to 66, 1.66, and then it came right back down to this zone. And when it came right back down, it rejected out of it again, and that time it pushed all the way up to 67, 1.67. So we had two impulsive moves out of this zone that created two highs. Nearly came down to this zone again right here. It was just a little bit above it, but from right here at the 65, 1.65 range again, it pushed this price all the way up to 68, 1.68. So we obviously know like this area is where buyers are located, right? Like obviously buyers are very, very strong in this area. So when it came down here again, I was more so on the lookout because this was going to be like about the fourth or fifth retouch, probably higher than that. So it's like you got to be very, very careful because yes, price can finally go ahead and break through and sell back down. That's why I gave an alternate scenario where it could break through here and then come back and retest. But it respected the first scenario and ended up buying all the way up. So here is where I entered the trade. The reason why is because once it created this impulsive move right here, like I said, this is your impulsive candle. This is your engulfing candle. So if you look here and we spread this out to, I may have made that too small. Let me widen it out a little bit. All right, here we go. Now I can move it. And then we spread it all the way out to the left. What do we see? We see it was a resistance right here. And then it broke through, had the impulsive move, retested, and then bought up right here. So it was a resistance that became a support. Now we got a breakthrough through this level again, and then broke back through, but it came back and retested it again as a support, and then that's what caused the buy up. So I was looking to see if it was going to break below here, because obviously this is a strong level of support. I mean, yeah, a strong level of support and structure. So my main focus was to see if it was going to break below here. And then if it was, that was going to end up creating a lower high and a lower low, possibly causing the reversal and the continuation of the sale. So since it didn't do that, that was my confirmation to buy. Once I saw the wick rejection out of here, that was basically when I entered, and the best candle to enter on is right here. Reason why is because that is when it broke above this high that it created, and then it was a very strong breakthrough. So that would have been your confirmation, like, okay, bulls are finally in place and they're pushing this market up. And even if you would have entered right at the opening of this candle, you still would have been able to catch 162 pips. That's still amazing. Like, that's great to catch in a day. So that was Euro NZD. Now again, you exited at the previous like the next strongest level of structure. Now some people may have pulled out right here, but honestly, I'm gonna just keep it real with y'all. If you entered right here, I'm not gonna lie, I'm not looking to pull out right here. And I'm not saying like, you know, I'm not grateful for the pips that I would have caught. Like I said, you know, 50 pips, that's good. Looking to catch 100 pips in a day. But I was just very confident that this trade was still going to go higher up. And the reason why to that is because even if I use my fib, right? We had plenty confirmations. We had plenty confirmations that this trade was going to continue up. So one of them is it came up, right? This is how I would have marked my fib. But if you look and see where it rejected at my 61.8. So that was my confirmation that this trade was going to go even higher than here. Because if it was going to go lower, or if it wasn't really going to move at all, I can't give away the full sauce. But let's just say my field levels played a big part in it, and that was basically my confirmation. Like, okay, this trade is going to go higher. So yeah, even at where it's at right now, it's at a good level of structure, but I feel like it may test up here and then drop down. It's just me though. We will see, because it's going to play out this week. Reason I do feel like that though, we got a big rejection right here, and it's like the market is gradually moving higher, right? You got higher highs and stuff like that. So I feel like the market is going to continue to move up and then end up rejecting out of here. But we'll go over that on Sunday's call again, as I said. Now, GJ is still playing out, but this is what I was talking to you guys about. I think that was yesterday when I was like, you know, look at where the market is at and let me know what y'all see. So, as you guys know, trends can be used as support or resistance, and it can be tested multiple times. And the trend can be retested either at the top or at the bottom. But a trend can be used multiple, like, different ways as when it comes to support and resistance. And this is an example of that. So here we marked up our trend at the top of the uptrend, right? You know, usually you will see it at the bottom, but we did it up here. So the trend was moving accordingly. And then we finally got the impulsive break right here. We got the retest, and then it bought up some more, right? But here you guys see that it broke through again at the bottom, and it came down and retested. And it's still kind of trading along this trend line, but it's very little movement, and it's kind of in consolidation right now. One of the reasons today is because it's at a monthly level. So it's going to consolidate for a little bit. So you guys have to know, like, where you are in the market. Right now in the market, this is where we are. If we look at the daily time frame, we are here. But look at where this level of structure is at. It's near some high level. I'm talking about swing highs. So with this being near swing high levels, it's going to consolidate a little bit. Like, even if I go to here, look what happened. The market was consolidating. Y'all see that? Like, the market is going to repeat itself. It was basically consolidating before it finally dropped down. So it's exactly what it's going to do in the same level. Like, look, it's just moving, just consolidating. And then it finally started to drop. So that's why I'm not really worried about the type of movement that we're getting over here right now. It's just going to consolidate. And then it's finally going to drop down. So GBP JPY is still playing out right now. Euro USD went amazing. Another great trade this week. Now, this one right here is basically trading the break and retest, but also my field also played a part in this. So using my field, I was able to kind of tell where the market was going to pull back to, and also where to enter in at. But if you look here at minor level of structure, like this is another great example of minor and major. In the major level of structure, we're in a downtrend. Market is clearly selling off, right? Even here, we're in consolidation. So on the minor time frame, or on a minor scale though, kind of have this little zone right here. Right? You got the little zone that the market is clearly moving in between right now. But if you even go smaller than that, we had a little uptrend right here. So we had the little uptrend and we had an impulsive break right here. So what I was waiting for was the break, which we got. And now I was waiting for the retest. And we ended up getting the retest right here and ended up selling off. So with this one, simple as just trading the break and retest, honestly. That's really all that was. Well, also the help of my field to help me understand like when to get in and stuff like that. But another way that you would have known that this was more than likely going to come back and retest was the market bounced off of this trend as well. Like I said, it was in an uptrend. So this was basically an uptrend within a major uptrend, if that makes sense. Am I confusing y'all real like right now, or do this make sense?
No, we're all good right here.
All right, so yeah. So basically, the market was bouncing off of this uptrend. So once it broke this uptrend, it came to the next level of structure. And either it was going to break this one or it was going to bounce off of this one and come back and retest our minor uptrend. Right? So once I saw the rejection off of this one, I was like, okay, this is more than likely going to come up here and retest this, which it did. And I knew that once it retested this, it was going to sell off. Well, I'm not going to say I knew that, but I'm going to show you after this call a couple ways that you can identify that.
All right.
All right. So let's go to GU, which is still playing out right now. But I want to show y'all something, because GU, I think I did this on the 4th, where I marked these up. But basically, I want to say like the market was right here when I marked this up. And I basically extended these all the way out. So this is basically like a rising triangle right here. All right. Or rising wedge, whatever you want to call it. But I basically extended these out. Now look at how the market like literally stayed in between this zone right here. This is what I mean by like training your eye, because I knew it was going to just get narrower and narrow, or it was going to get narrower. Is that a word? Let's see. Let's see if narrow is a word. Did I just make it up?
No, sir.
You saying is narrow a word or narrower?
Yeah, narrower with ER at the end.
I think it's more narrow. I don't know if narrower. I can't even say that.
I know I was saying like it's a word, but it just didn't sound right coming out of my mouth today. But anyway, like it, you guys see how the market just kept getting more narrow as it went on. Mm-hmm. It stayed within these zones or stayed within these lines. Did I know it was going to do that? No, but it's like I've seen it happen before, so that's why I went ahead and extended it all the way out, and it still stayed in between the lines. So my eyes have seen this type of pattern before. That's how I was able to mark this up like this. That's how I was able to. That's why I extended my lines, because if it's not going to break, it's only going to get smaller and smaller until it does eventually break. And that's why I got this marked up like this. So I got it basically, it's either going to break out below or break out above and continue to buy up. I'm gonna tell y'all, just me honest, I feel like it's gonna break out below and sell off. But we'll get into that on Sunday. So yeah, this trade is still playing out right now though. So we're gonna wait and see what's gonna happen with that. Same thing. Well, actually, UJ ended up breaking out in on Friday, right before the market ended up closing. So ended up breaking out. Now all we're waiting for is the retest. At first, it was the same thing with GJ. I think, yeah. So same thing as GJ. We had the trend. We marked our trend up above the candlesticks. You could have marked it up below as well, but for this reference, I marked it up above it. The reason as to why is because I saw that the market was retesting right here and created an uptrend. So I was like, more than likely is going based off of this right here, which it was. So I ended up, I'm gonna show you just exactly what I did. And I wasn't 100% sure, but I just marked it up from right here. And then I just dragged it all the way along, and just to see if it ended up bouncing off of this level. So all I did was just, I marked this up, but I just extended it to where the market is right now and see if it matched up. And it did. So that's why I marked up my trend like this. And you guys see like it still respected it. So we ended up getting the breakout again. And I'm gonna show y'all what I expected to play out. Like same thing as EU, honestly. Kind of see it playing out like EU. So we will see. You guys saw same thing with GJ. We got the breakout, and then we got the retest. So we will see once that happens. It is in a major level of structure. Our supply zone, it's in our supply zone, and it's gradually been moving down. And we finally got the breakout, and now we're waiting for the retest. So you guys know UJ been in consolidation. The reason as to why. What's the reason why UJ been in consolidation? Because it's where? Let me see if y'all been listening. Y'all ain't been listening. It's crazy.
Didn't you just say it's because it's in the supply zone?
Yeah, it's in the supply zone, but where's the supply zone located? Let me go. Let me zoom out a little bit more. When was the last time that the market was at this level? All the way in 2017, right?
2017, yeah.
So that would make it a monthly zone, or technically a yearly zone in this case. So that means it's going to consolidate for a while. It's definitely going to consolidate for a while. Think of it as like a fast-moving train, right? So a train moving full speed is going to take a while to slow down, but it's also going to take a while to start back up and go back to moving full speed. So it's basically how the market is. The market was moving full speed up. Like y'all, this is a really fast buy up compared to the sell down to this level. Like it took nearly
3 4 years.
Yeah, 3 to 4 years for it to get to this level. But you see how fast it bought back up to this level? It bought back up to this level within a year. But it took 4 years to come back down here. So like that's really, really fast, right?
Right.
So with it moving that fast, it's going to take a while for it to sell back down, or in other words, start back up and build the momentum to sell back down again. So it's going to consolidate. So we saw a rapid increase in USD JPY. So you guys know what y'all know what boosted that, what's been going on around the world and stuff like that. So it's gonna consolidate for a while, but just know once it sell off, it's gonna sell off major. So we're just gonna wait for that retest. I'm looking for it to come back and retest here and then sell off. If it respects this level, retest, we good. Or just may not retest at all and just say, hey, like, I'm finna sell off. So I may pop
I don't know if I could hold. That's a whole bunch of years to be holding. You feel me?
It is a long time. That's a very long time to be holding that trade. But you're just gonna have to capitalize on it throughout the year, honestly. Like take trades in between. But yeah.
No, for real.
That was you, Jay. So USD CAD. Now, UCAD went great. Yeah, I know my yearly setup for UCAD. If you don't, let me show you real quick.
Gotcha.
This is my yearly prediction for UCAD. So I got it coming down here and then possibly having that same fast increase that USD JPY had. So we see that it's possible. We just seen that it's possible, right? So don't count it out. But y'all, so far, it is going as planned. I would just say that. So far, it is going as planned. What is it lately? But yeah, it's gonna, it's gonna be a whole lot of noise in between. Y'all know that already. So it's gonna be levels where we could buy, levels where we could sell. But for the overall trade, I'm looking for it to come down to here and then reject and buy back up here. So we know what we're looking for the overall trade. Do that mean that we can't capitalize on the minor structure in between? No. We still can make money on the buy. We can make money on minor sales, like stuff like that. So that's basically what we did here. And like I told y'all, I was going to buy up. Like I said, I was going to enter right here. And it ended up coming back to this level. Never did break below though. So that was still no reason to exit out of this trade, right? And never did come back and hit our stop loss. But from entering right here, it went up and then came back down a little bit, but it initially went all the way up to our TP. Now, let me show you. Let's look deeper into it. Well, first, let me backtrack a little bit. Let me backtrack. So, again, my fib played a major part in this. But we have two levels of searching. We have our downtrend. We also had this uptrend right here, which I knew was going to get broken. Why was this uptrend going to get broken? Like more than likely going to be broken quicker. Let me say that. Because it's too instant. It's way too instant. You see how this downtrend is more gradual, but this uptrend is basically about pointing straight up, nearly.
Yeah.
So that is the reason why. I didn't really respect this uptrend right here, but I was basically like trying to trade the retest of it. I about knew that I was going to retest it, but it retested like a higher portion of this trend line. But if you look to the left, it basically matched this high right here. So once you saw that it about went out of our zone, because I really wanted to trade it off of this zone, but it ended up going a little bit above it. So what that mean? Okay, just don't enter right here. Like simple, just don't enter right here. And wait, see where it's gonna move to next, or where could it possibly move to next? And the next level that it possibly could have moved to was right here. So seeing that, I was just looking to trade out of this zone next. And once I seen what I needed to see, then boom, we activated the trade. But I do want you guys to pay attention to some stuff. So here it came to this zone where we were possibly looking at selling out of at first. So we bought it up to this zone and we were looking to sell out of this same zone. So it came up here and it sold down. So it looked like it was about to sell, right? It looked like it. Not gonna lie, almost got me. But if you look at the candles afterwards, y'all see that? It's basically still buying up. Slowly, but surely still buying up. And then we had a couple of wick rejections, right? But we never did get the candlestick to confirm that this market is ready to sell. So if you look at this group of candlesticks, when it got in the zone, and then compare it to this group of candlesticks when it got to this zone over here, you see a big difference, right? You see a big difference. Which one looked like it's about to sell or really ready to sell off? This one. We have way more confirmation right here that this market is ready to sell off than we did right here. Right? Y'all see that?
Oh, you froze.
What part did I freeze at?
Okay, now we good. All right. What we looking at?
All right, bet. I was saying, y'all see like the difference between the two different zones and which one was stronger to confirm the sale?
Oh yeah, the one got longer wicks. I mean, longer candles. My fault.
Yep. So like one rejection is way stronger than the other, basically. And that's why it's very important to read your candles. Candlestick analysis. Understand your candlesticks. Understand what you're looking at. Because some people probably took this one and thought it was going to sell off and quickly realized that, okay, no, this market is definitely still buying up. But if they would have took it right here, they definitely would have went in profit about the moment they took the trade near it. Because this one had a stronger rejection out of this zone, and it was just way more confirmation to sell. So another thing to help you with that though is honestly going to the 4 hour. So on the 1 hour, you got faked out. You got faked out on the 1 hour, right? But if you look at the 4 hour, these candlesticks tell a whole different story. It tells a whole different story, right? Here, we would have known not to buy or not to sell right here. We would have known not to sell right here, looking at the 4 hour. But here, okay, I could sell right here. I could definitely sell right here. Like, look at this strong rejection out of this zone right here, leading to this candle, entered on this candle, and then caught the sell all the way down for 117 pips. So y'all see the big difference between the time frames from the 1 hour to the 4 hour, how the candlesticks look and how it's more confirming right here than it was right here to enter for the sale.
Yeah, night and day, basically.
Literally night and day. So that's why it's very important to use your time frames. Use different time frames. Don't just get stuck on the 1 hour and think like, oh, okay, I'm just going to trade the 1 hour because I can still read the charts and everything. No. Use your other time frames because trades will definitely look more clearer. Like even on a daily and a weekly and stuff, you see stuff more clearly. You understand where you are in the market better. So, like I was saying with GJ, if you look here on a 1 hour, we in consolidation, right? There's a whole lot of noise in between, but if you look closer or pay closer attention, the market has now created a zone right here. Let me use these. So, depending on which one they break out of, that's where the market is going to move. We go to GU. Same thing. Instead of worried about a fake out and stuff like that, on the 4 hour, that's why I always, when I text in the group chat, like, wait till the 4 hour candlestick close and stuff like that, because on the 1 hour right here, I believe it about looked like a fake out on the 1 hour. Let me see. How did I have it? Oh no, I had this marked up at first. And then I came back and redid it. So I had this marked up, right? And it looked good. Like, yeah, minor structure, you know, trading this. We got the retest, boom, all that looked good, right? We got the break, we got the retest. So that looked good, yeah. But zoom out. Look at major structure. And we see a whole different story. We see a whole different story. So even going off of this retest right here, does it look like the market is ready to sell down? No.
No.
Not at all. So going off major structure, like, it's just a whole different story. Going off bigger time frame, it's a whole different story. You need everything to line up on every single time frame. It's very important to have everything lined up on every single time frame. So that's basically the market review for this week. Do you guys have any questions so far? Anything?
I was actually on the money as far as my markups. I was just at work and I couldn't get in none of the stuff I was trying to get in. Oh,
yeah. It's hard to trade when
yeah.
you're at work, honestly. It's really hard to trade when you're at work. I ain't gonna lie. And I still try to do it to this day, but it doesn't really help my case, because you start when you're at work and you find yourself like out of profit or something like that, when you have maybe 2 minutes to look at your phone,
Start
you
panicking.
go look at your trade and you like, oh crap, I'm out of profit. Like, I ain't got time to look at the charts and see what's going on. Do I need to close this trade? Do I need, like, what do I need to do? And it causes panic. And most of the time you're panicking for no reason. Because if you actually had time to go sit down and look at the charts, you would see, okay, it's a pullback. But is it a reason for me to exit this trade? Is it a reason for me to maybe re-enter or anything like, you know, just small stuff like that. Main one is it a reason for me to exit this trade, really? But you would see, like, most of the time it's probably not. You probably could see like you could have moved your stop loss a little bit lower and just simple stuff like that. But most of the time it's really not really it don't do you any good to trade at work, honestly. And the best way to really, like I said, manage that is just setting alerts. Set alerts for key zones. So when they do trigger at work, you already know where you are in the market, right? You know where you are in the market because you set an alert for a specific area. So you know where price is currently. You know that it's at a demand zone or it's entering a demand or supply zone. You know that it's either reaching a swing high or swing low. Like, you know exactly where price is at. So you have no reason to worry. You have no reason to panic because you know where price is. Now, yes, that will allow you to look at your charts for about 2 to 3 minutes and be like, okay, is it an impulse? Is it a correction? Is it rejecting off of the zone that I just marked up? Like, you should be able to look at your charts in 2 to 3 minutes and be able to tell what is going on right now. And that will allow you to be like just more calm and stuff like that with your moves.
I had alerts and everything set up. I just was not there.
Yeah.
It's all cool though. Wow, we got gonna keep it going.
Yeah, you good. But that will be the end of the weekly markup review. And thank you guys for watching.